Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Friday, April the 12th. Song remains the same. The Dow up 62, Nasdaq up 2, only 2 actually. We had a sluggish Apple yesterday from the previous day, so Apple was kind of pausing. And then we had downgraded Microsoft, PC makers and suppliers, Intel, Broadcom, all gap lower and pretty much stayed in their ranges all day. So Nasdaq really didn't move much. But technology in itself, the Qs, I want to show you. They're finally starting to perk up a little bit. I showed you that yesterday, but we had a small day on the Qs, but still, that's something that we're going to be watching as well as the financials. S&P up 5, and of course the dollar down 24 cents. Okay, now not much really to show you today other than the same indexes that we've been tracking. Last week's low on the S&P is really going to be a tell sign, which we already pointed out in yesterday's video. The 153.65 in the spiders, which coincides nicely on the 50-day. I'm going to get into that in a moment. So we want to be looking for that low. That pivotal low is going to be important moving forward. I also did a quick analysis on the weekly charts because as the Dow now the Dow, S&P, they're all at highs, and we have 5 days straight up in the indexes where stocks really haven't been moving as much, only select a few. And I want to look at it, dissect more, and I'll get a bigger report on the weekly on Monday. I might even put it out Sunday night so you guys can review it a little bit at your leisure. But the weeklies look good. So I mentioned the weeklies look good about a month ago as well. So technically, still the bulls are in control. There's nothing wrong with the market. The daily, yes, we are extended. We are overbought on some of our indicators. Overbought isn't a sell signal. Keep that in mind. I always reiterate that. Let's look at our NYMO. NYMO's starting to make some movement, as you can see, but we are still not at these levels. So technically, the NYMO could come up here and we can really be overbought. And then that's when you want to, if you're looking to take a counter trend trade to the market being short, take a look at the NYMO and watch it and study it. And you can look at this through stock charts, $ NYMO. It's a great indicator if you want to take a little bit of a longer term or a swing play short. Right now, this is still not the time telling me to. Now, we are down in the pre-market, about 3 handles, no big deal. I still suspect that the markets are to be bought today on a dip play until otherwise. Okay. Now, I personally am not looking to buy a market that's up 5 days in a row, and most of it is indexes, but I still do not want to take that risk of a intraday reversal. Now, we were looking for maybe a gap up and rally. We didn't get that. We had a slight gap up, and then we just kind of grinded higher all day. That's not capitulation. We want a gap up and run hard for the morning session, and then consolidate and then start to roll. Now, we were looking like that this was going to probably pan out maybe towards the end of the day, but nothing really materialized. So the market is still in a strong uptrend. We do not want to be counter trend trading a strong uptrend. We want to stick to the trend. I know it's corny, but the trend is your friend, and it's so true. So especially when you're day trading. All right, so let's take a look at the S&P stocks above the 50-day, and this is where we had the divergence. Right? We had this little market continues to grind high with the divergence that we did take out yesterday on a closing basis, the up to 81%. But even then, look, we're only up to 2%. I mean, it should be a little bit more in the last 4 or 5 days. We should be taking out the highs with the S&P, right? We're not. We're still lagging. So stocks aren't moving. The indexes are moving more than stocks are. Just keep that in mind. All right, now let's go look at the charts. Here is our daily chart, and if you remember on the 60-minute chart, I had this line, all our support levels, which I'll show you in a moment. We have our 153.65, and I've had this for months and months on the first and second touch here of this gap. We had this gap up. So we have gap support from 153.65 to 152.95. So this is a gap area of support, but this marks a pivotal low, a big pivotal low, because we have 3 touches, 1, 2, actually 3, 4, excuse me, and then we have the 50-day moving average right underneath it. Now, as the market consolidates, the 50-day moving average will continue to move higher and probably catch up to this lower end of this trend line, which will also be probably the first spot where the market would hold support. And then, of course, you'll have this continued pivotal low. All right. Now, this area up here, the 157 area, yeah, markets will price will pause, but eventually will eat through that support and then test the lower trend line, which probably would coincide nicely with the 50-day moving average. We have decent volume yesterday, but still below average from the previous big day up. Now we're up 5 days, guys. So if you're long, just use caution again to your risk and trading plan. But if you're day trading, we're up 5 days and we're up big 5 days. I mean, we're talking now 153.65. You look at just a little over under 7 points here. So just use a little caution. We're definitely extended, definitely in use of a pullback. This market, as you can see, doesn't give it to you. It's up, up, up. Sideways consolidation, up for another 6, 7, 8 days, another 8 or 10 day consolidation, a 2-day pullback, and 5 days straight up again. So pullbacks have been 1 to 2 days. That's not what I like to see in a real healthy market. Now, why isn't this healthy to me? As a technician, as a regular investor, you're saying, wow, this market's strong. Sure it is. But with all the warning signs that I see, kind of skews my way of thinking of trading, saying, hey, you know what, we're not, all our ducks are not in order. We have divergence with the IWMs and the transports at one time the last couple of weeks. I'll get into that as well. We have our indicators showing red flags. We have our world market started rolling over, and the Dow and the S&P did not. So that's, to me, not a real healthy market where everything's rolling on all cylinders. You only have if you had an 8-cylinder, you're running on 5. So and me, I am, as I mentioned, I'm not swing trading because I just don't want to take that overnight risk. But there's still a lot of unanswered questions in Europe. So I'm really just looking for to day trade. And yes, it's quite frustrating sometimes because sometimes it's not according to my plan that I'm looking to take trades in certain parts of the day, so I don't do anything. But it's okay because you have to be nimble and be ready for any type of movement play, any type of reversal where if you're trying to short the market the last 5 days, you're totally getting beat up. It's okay to take small losses, but if you're taking big hits here, this is not what you want to do because when the market does roll over, now you're a scared kitten, basically. Okay, so I just wanted to make that point because I get quite a bit of emails and they say, oh, I don't know what to do with this type of market. And it is a little bit of a difficult market for if you're day trading certain selective stocks or whatever in your trading plan because of you only have 6.5 hours to trade and everything does look ripe for a sell-off, but you really don't want to do that unless you really get some quality signals and trade setups. Okay, so now let's get to the 60-minute, and here is where I had mentioned, I just brought this back over here, I mentioned from here and here, this is a real big area, and sure enough, it touched it literally to the penny. So this area, 153.65, is going to be on my radar, as well as certain other pivot lows, but this is going to be a real main pivot. This could actually be a trend changer here, this 153.65. So let's keep that in mind here going forward. Okay, and this is just the 30-minute chart that we did break out, as you can see. I'm going to actually bring this down over here. This will be a better, this is the 153.65 area. And now, as you can see here, we just kind of consolidated a little bit on the 30-minute chart. IWMs did manage to get up above the lower trend line of this upper trend line. Of this upper channel, of the IWMs. Now we're just kind of sitting here. We did break out, and then we actually closed just right at the previous day's high. Volume was a little lackluster, but again, in this type of environment, look into the weekly charts for additional study for technical analysis, and I would really start honing in on price and certain key pivotal support and resistance areas, because when you have the oscillators really getting tossed around here, sometimes you get off a little bit of a weaker signal. So until markets start to trend, start either reversing or start to at least, correct for 3, 4, 5 days and then realign itself and then get back. When it gets back doing that, that's when you could say, hey, you know what? Let's get back to our oscillators. Let's pay more attention to them anyway. That would be a better word to use. Pay more attention to them when things start to get a little bit more in sync with each other. All right, here's the transports. Now, I mentioned, watch the transports here. They're lagging, and sure enough, we broke back up above it. We're up above the lower trend line. So, believe it or not, our leaders were lagging, and our followers were leading. Now, they actually pulled our leaders back into sync with the other markets here. Now, so we're above it, bullish. Weekly chart looks bullish, guys. We're sitting on the 20-day moving average. Really nothing to say other than a bullish market here. XLF, big bearish rising wedge. Again, only bearish when it breaks below. We have the financials here leading the charge as well. And we're just sitting here. And if the financials break out, that's going to definitely help our other sectors, our other leading sectors. Here's the Dow. Just actually, it's kind of comical. It's on fire here. It's just amazing how from January the 2nd, how the Dow just rallied every single day, consolidated, rallied again, consolidated, now rallying again, and probably will be in consolidation mode again until until the next either break up or break down. Crazy market. That's all I can tell you. 25 years doing this, I've never seen anything like it. And I said that 2 years ago, back in 2010 or 2009 when 2010, excuse me, when the markets rallied, and then consolidated. But nonetheless, just crazy market. This is actually amazing. Okay, Apple. Take a look at Apple here. Apple double bottom, holding in between an inside day from the previous day. So pretty much constructive for the bulls. I'd like to see this stochastic now really start to break higher, and then I'd like to get our signal. If you could see this here, let me move this up a little bit. I want to see the MACD's cross, and I want to see the stochastic cross above 20, and then that'll really give you a decent signal. Then that would get us above 440, and then even for a trade, you could take it for a trade, and with your stops below, 435 or 436 in this area here, just for a trade. I still think Apple needs to carve out a bigger bottom, maybe one more low, and then Apple might be done for a while. But looking constructive though. And then take a look at the Qs. Lastly is the Qs. Technology actually started, excuse me, I'm sorry, this is SMH. SMH actually really picked up momentum, as I noted a couple of weeks ago, how sluggish the semiconductor was. And to really have a good rally, you need a lot of these sectors to be in line with the markets. At least it does help. So anyway, we did get that break back high, and this is what I'd like to see Apple do as well with the stochastics, and we're getting our cross here, so we'll see. Now we're just kind of pausing in this little consolidation area. There's upper end of resistance, 35.65, and a break above it will test the lower end, the back end of the lower trend line here. So still needs a little bit more work on the semis, but still constructive for the bulls. Again, nothing bad to say. Here's the Qs. Look at the Qs. Explosive move up in 5 days. The Qs woke up, and this is what I'm saying here about the Qs. If technology takes the lead again, you're going to have financials humming away, and then you're going to have the semis, and then of course the Russell will catch a continued bid as well as the transports, and those are the sectors you want to really key down and look at for trend, for bias, and the bias has been nothing but bullish. So guys, really keep that in mind. Be careful trying to short the market here. I wouldn't do it. It's not worth it. It's a very strong trend, and everybody's buying the indexes. Everybody. You can see if you go down to different stocks, and you'll see, scan through 100, 200 stocks, and you'll see, a third of them are moving, and the other 2/3 are just kind of chugging along here. All right, guys, I want everybody to have a great weekend. I'm going to have a big analysis on Monday. I'll try to get it out Sunday night as well. And please keep your stops in place. Try not to be a hero. Be ready and be patient and wait for this market to come to you for some key signals. And then it will reward you, trust me. Have a great weekend, everybody. Take care.